All right, my brother in all red. Jesse, it's good to see you, my guy.
Great to
What
see
part of the
you,
world
my
are you
G.
in this time?
Man, out here in Raleigh. I'll be out here for the next few weeks. Actually, I'm working in Durham specifically, which I didn't even know. This is my first time out here. So I didn't even know that Raleigh, Durham was like a metropolitan similar to Atlanta.
Hmm.
I didn't even know that. So yeah, out here in Durham, which is pretty dope out here, man. Pretty dope.
What's up, man? That's what's up. I like that area. A lot of times, I'm in Burlington, so I'm a little ways away, like an hour drive. But going there, great shops, great food, things to do, great people. You see a lot of enterprise happening. You see a lot of people making moves, so that's dope. So, guys, welcome to the asset class. Last week, we just got so into it. We didn't even do intros. We just went straight loaded Lux, like you're gonna get this work. As I got to introduce my partner because in the world of business, we know that the number one asset you can own is a cash flowing business. And sometimes the hardest challenge in that is finding the cash, finding the value, finding the leaks. Jesse is one of the best people on the planet who can find the value in your business, help you expand that, whether we're talking about KPIs, whether we're talking about SOPs, whether we're talking about communication with vendors, clients, and of course, your employees. So we would not be here on the podcast without my partner, the owner and visionary of Bullseye Consulting, Jesse Boyd.
Yeah. And my man Earl Harden on the tax side, like we collectively as entrepreneurs, and I see it every single day, companies that, every client of mine, none of them understand taxes and they doing a lot of the wrong shit. Oftentimes a CPA will tell a business owner, you need to purchase some equipment to reduce your tax exposure, which there's a place for that in instances, but if the equipment is not being used and it's not actually returning value to the company, that is a cheap, ill-advised move. When I say cheap, I mean um, the there is no value to that advice. It's just ill-advised. It really is. Whereas having an intentional tax strategy where you're proactively addressing what your tax exposure is going to be through investing in other things brings back an actual return. As a certified tax and business advisor, that's what my man Earl brings to the table amongst the plethora of knowledge and services that he supports on your wealth building journey. So yeah, my man Earl Harden, founder, visionary, tax erasers. See that?
Hey,
You see that TM? You see that trademark?
you got to talk about the TM. I appreciate you, my brother. And as you can tell, we're going to get into some really actionable information here. So I'm going to go ahead and break out our disclaimer. So everything that we're talking about here today is for informational and educational purposes. We highly encourage you to work with licensed professionals with a track record of success, bonded, if need be, based on the case of the business, and always do real research, because as we learn more, each one, reach one, teach one, because that's how we learn and grow as a community.
Already. So man, what's been What's been new on your side of business, my G?
Bro, we're getting the terrible and the terrific at the same time. So on the terrific side, making more and more strategic partnerships with business attorneys, private equity firms, funding and capital companies, because they need to do something for their client. Or I'm like, hey, you're helping this client with their employer retention tax credit, and a portion of that's tax free and a portion of it isn't. What do you do to help the client with the portion that isn't? Nothing. Oh, well, what if we took care of that? What if you had a client where their DTI was in a situation where they can't qualify for the money you really want to give them? But if their books look different, and if they were employing a more holistic tax strategy, that not only would they qualify for your product, you'd be able to write 2, 3, or sometimes 4 times more a bigger loan. A bigger loan is a safer loan. So that's been amazing, getting those channels set up and just starting to get clients into the pipeline. So I'm really excited for that. On the terrible side, bro, scammers and jammers, man. And we always gotta preach only what we practice, man. And I got caught in a transition period where I was looking to open 3 new business bank accounts, because I've said multiple times on this podcast, I say almost every day to clients, you need to have at least 3 business bank accounts, minimum, because you never know what can happen. What would happen if all your money got jammed up? Guess what happened to me? I got my money jammed up, and there are different reasons why it happens to different businesses. A lot of people, especially in like the funding space or credit repair or e-com, they know that those vendor accounts can get locked up out of nowhere. There's been so many times, you go on Facebook and you see one of your favorite celebrities, my PayPal's locked up, dog. Got 180,000 in here that I can't even spend. And then that Ferrari's getting repoed because they're living a check to check lifestyle. So it is definitely ups and downs, but that's what makes the EKG of life, right? Wait, what's good on your end, my guy?
Man, just continuing to do what I love. This consulting thing is, the beauty of it is it's not work for me at all. It truly is it's really just an extension of who I am as a person. So it's exciting and fulfilling. Actually, that's the better word. It is fulfilling to every day be able to operate in the space in which I'm having meaningful impact on businesses, but it don't feel like work at all. Now, as far as the consulting part, now contracting for another firm, that has its own set of challenges because they have an infrastructure that I got to follow, which for the past 3 years, it's been me following me. So that part has its frustrations at times, but the act of actually coming into a business, so my current client, just walking the production floor the first day and seeing all of the opportunity just from walking the floor one time, and in a week's time, we're putting things in place that fundamentally shifts the way that business has been operating for 20, 30 years. It's insane. And to see, because whatever problems that happen within any given business that's causing it to be either not profitable or is showing diminished returns, the people that work in that business have all of the answers to what's causing that to be. But what ends up happening over time is employees come to the owner or their boss and they share different problems that they've observed, but the owner or management team is so busy, they are so busy chasing their own tail that they don't take the necessary action, or they just kind of shut down that feedback loop. And then the team just turns into, all right, well, I'm coming to work and getting my paycheck and going home. So to be able to come in short order, have conversations with folks that have been just kind of shut down morally, to reinvigorate a whole new level of commitment to cause, where, you know, they're taking on new roles that have clear expectations accordingly, and for them to like really grasp onto it, and knowing that all of that comes from my observations and ability to articulate a cleaner, smoother vision for the future that materializes into a new way of doing business. And just watching that happen, client after client, it's dope, it's fulfilling, and also refreshing in the sense of, I know what the future state of Bullseye Consulting is going to look like when we get into, you know, venture capital, where we're investing in and purchasing businesses, not under the traditional guise of the flip strategy of, you know, we going to purchase stake in this business and engineer value into it to flip it for a return. Nah, that's not what we'll be doing. We will have a portfolio of businesses that we engineer the value into them by installing the appropriate management team with the appropriate skill sets and the appropriate measurements for their performance. And each of these assets will continue to just grow. You know, so like thinking about what that looks like in the future, because again, I get to see it every day in these businesses where we're taking the resources that are already there and just putting batteries in their backs to really take the business to a whole new level. So, man, it you know, this week, last week, every week is a continuation of that same ethos, bro.
Bro, that's fire. And I've always been excited about, you know, our journey and what it's going to look like as we're acquiring different cash flowing assets, whether it's real estate in the right countries and the right type of real estate in other countries, different cash flowing businesses, and having someone like yourself where I know that when I purchase a good business, you are going to be able to take the enterprise value of that company and bring it to where it should really be while keeping the heart and soul of the business. I think where a lot of people mess up when it comes to private equity is they want to strip the soul and they want to go straight off of numbers, and then it ends up failing. That's why, my bias with private equity is definitely when it comes to hospitals. Almost any hospital chain or just a conglomerate that are now in a portfolio that are controlled by private equity, the care has gotten worse since private equity has assumed those companies. And it's one of those things, a great conversation was had earlier this week about whether I agree with it or not. The mark of the educated mind is to be able to entertain an idea. Doesn't mean I have to die for it. Really, really, really intelligent gal who's an economist, and we're just having, light drinks and conversation, and she's breaking down that, life, liberty, and the pursuit of happiness directly correlates to how business should be conducted. So healthcare, in her opinion, should never be a for-profit business. So with the way that the American medical system is, it is very privatized, and it is very much so for profit, where, we see people controlling insulin markets and controlling HIV medication and so many other things, where if you don't have that medication, you perish. And they're talking about returns and dividends to shareholders. That's a space that maybe it should be holier than that. Maybe it should be operated in a different manner. But it was a really great conversation to have, where I'd never consciously made the parallels between private prisons, and how private prisons being for profit, pushes policy, which changes our pursuit of happiness, and it changes the whole justice equation, because it's now shifted because people are getting paid in multiple different ways to keep these prisons full. And, in the news, we see a couple different states with large private prisons that are suing the states because the prisons are not full. And there were contracts. And with contracts, there are always expectations to be met. How does that resonate with you? Have you ever heard anything similar to that before?
Nah, bro. That I'm not. Talk to me. Give me some more context to that.
Okay. So life, liberty, and pursuit of happiness should be the core principles of the United States. If you ask some people, they'll say it absolutely is. If you ask some, they say absolutely effing not. The American experience varies different. It differs a lot depending on where you live, who you are, and what you look like. So her ideas were kind of like we've talked about many times on this podcast, the big machine that is the United States, where policy and diplomacy, the norms of society, are all driven by the things that we elevate. And we put profit pretty high, and we put litigation pretty high as well. So we have created a system of a for-profit healthcare system, and that directly infringes on the core principles that we're supposed to be living on. Same thing with private prison, and then to some effect, private education, because her point of view was going to a private school is not bad for the kids that go to the private school. They have a great education, and a lot of times it's robust and worldly. The issue is how they get their funds, where it's a private institution, but they're still getting state funds, and a lot of times it's disproportionate to public schools, and the public schools tend to have more minorities. So she was talking about breaking the system that is creating inequalities and injustice and unfairness and a lower quality of life.
Bruh, and all of that circles back to the same principle that we've been reiterating episode after episode, which is the most important office in the land is that of citizen. So until we collectively, as a citizenry, decide that the status quo is no longer acceptable, we're going to continue to see remixed versions of the same shit. So the Supreme Court just now basically gutted the Voting Rights Act, which disproportionately affects who? Us, Black and brown folk. So what that means is when we don't have adequate representation in government, which even before the Supreme Court decision, we haven't had adequate representation, but now it's about to be on some Hunger Games type shit where states are able to draw crazy district lines that basically take the population centers of Black and brown folks and put them into, like, it splits them. And so it will combine as many together so that all of those folks are represented. Instead of having multiple representatives in Congress, they'll have one. Or it's split where there isn't enough representation within the district that it ends up going to a representative that does not represent the views and interests of Black and brown folks. So when we talk about the education system and how public school systems receive federal funding versus how private educational institutions, the charter schools and whatnot, are getting funding as well, and who those private schools primarily cater to versus who the public schools primarily cater to, you see it very clearly. There's an intentional divestment in certain areas that primarily impact us, Black and brown folk. And it's a perpetual cycle of nasty work. So, I mean, the life, liberty, and the pursuit of happiness, the wild part is, I mean, all of it is wild. So I can't just say the wild part. All of it is. The truly fucked up part about it is it's been bad for years already. And it's only going to get worse because there are not enough citizens that are willing to do the things that it takes. And I'm not talking on no anarchy or overthrowing government or nothing like that, but leveraging the system as it's designed, meaning not only do we vote, but we also hold our elected officials accountable. When we don't have that, they can play all of these games that continue to result in the same shit. So I was just talking about this on my story last night. The game is being rigged in a different kind of way right now. So, like, we're technically free, but when you start imposing all of these limitations, stripping away various rights and protections, it's really not. It's a new form of enslavement because it creates a permanent underclass that is not able to participate in the American experience freely, openly. It's, I don't know, man. I don't know.
I hear that, and I think one of the interesting things is to see how the system is also breaking apart. So all this district gerrymandering is happening, and at the same time, we see political shifts against that party. So, I mean, we're talking about places that were considered the strongest red centers of the United States, where they are definitely shifting away. So, even though the map is drawn up a certain way, the sentiment of the people doesn't align with that. So, with that friction, we're going to have to see a lot of different change. I'm always a proponent of ranked choice voting because we would have to have candidates that appealed to more than one super small niche. And that means they have to be knowledgeable on different things. And that means they actually have to have a plan instead of a concept of a concept of a plan, as some of these candidates move with. And as we talk about like a concept of a plan, shifting of this economy, we can't get away from oil. And I was asked a great question by one of my new hires, one of my new guys on the tax team. He asked if gas, like gasoline, is already in the tanks at the gas station, then why does the price change? Like, how can it change overnight? It's the same gas that's in there. It's like, that is a great question. And then that led to a really awesome conversation. It's like, I should have this on the pod because I'm sure a lot of people ask the same thing. Like, why does it go up? It's the same gas. I can hear my own. This is the same gas that was in there yesterday. Give me yesterday's price. So when we're talking about different commodities, when we're talking about crude oil, so those are the raw ingredients that make up the world. Not just oil, but energy. Energy is a commodity. When we look at corn and steel and these different things that make the infrastructure of the world, a lot of them are traded in a special contract that's called futures. Jesse, how often do you talk about futures contracts and what you do?
Hardly ever.
Yeah,
But I'm also not I don't know enough about the stock market and how it works to the intricate like details, the minutia. When I think about the mastery of my craft and the commitment to master my craft, I haven't given myself much room to venture outside of that because my craft is so wide when it comes to, you know, the sales piece, the operational efficiency piece, the accounting piece, the how all of that stuff comes together. So it's like I've been intentional about not trying to go too far off track because like I know how my mind works. So once I start tapping into that too much, then I end up moving away from the main thing. So
and we got to keep the main thing the main
right,
thing,
right,
right?
right, right.
So y'all heard him say that to become world class in what he did, what he does, not what he did, what he does, because he does it every damn day. He had to stop his mind at a point, and he just lets another professional take care of that for him. So you guys should do the same thing. That's exactly why I asked you that because I knew you'd have a great answer. I am not trying to turn you guys into futures traders, but I want you guys to understand what futures are so that you can move intelligently because informed people make great decisions for themselves. So a when we talk about stocks, A stock is just equity in a company. Almost all wealth in America is built through a company, through some form of ownership of a company. So you could straight up own a company. That's what Jesse and I are doing. You could be like our clients where they're trying to grow their companies. That's who we serve. You can put money into a rental piece of real estate. That's a business. Most people put that in an LLC. You could put money into the stock market. What are stocks? Stocks are small pieces of ownership of a bigger company. That's buying business. Where do we make wealth when we're not buying business? We don't. You could put your money in gold and you could wait for 20 years to have the eureka moment where it goes up really high. And then once you sell that gold and you get a currency, where do you put that currency? So that inflation doesn't eat it. Back in a business. There is no way to get around it. So with that, since everything is business, there's risk. And when we're talking about running a business, risk mitigation is one of the biggest things you need to take care of, because catastrophic loss will kill a business. It will kill a retirement way faster than just not having a great year. And if you say that out loud, you're like, yeah, if I lost everything, that would make life hard, versus, oh, I didn't grow this year. But you didn't lose? Cool. Let's try again next year. Let's change the formula up. So if I owned a field of corn and Jesse owns a cereal company where they make some sort of cereal from corn, a lot of cereal comes from corn, right? I know that it takes time for me to do my harvest, and I know that the price of corn is going to go up and down. To protect my business, I need to ensure that a certain portion of my corn gets sold at a certain price. And that way I can lock in profits. Now, the operational piece of the business, the thing that Jesse's world class in, that's a whole nother thing to worry about, that I'm not overspending, that I'm deploying capital the right way, that I'm deploying labor the right way, and all those different channels. That's a whole different conversation. We're going to assume that stuff is good because I'm working with Bullseye Consulting, so they got my back. Now, this is Jesse's other company where he owns a cereal factory. From his point of view, he's like, I need this corn. However, I can't afford to buy all of the corn when it's at a really low price. So let's say the market takes a dip because of whatever reason, administration sends out a tweet, crashes the market. He's like, dang, that is the cheapest corn's been in 7 years. If he attempted to buy all of that corn at once, now he has a new problem. Where the hell am I putting all this corn? I have a cereal factory, not these huge farm to be able to store corn. So he creates a new problem, he creates a new cost, and he has a whole new business, which is keeping this corn clean, keeping the rats away from it, making sure the silo doesn't explode. Like, there's so many variables when you're storing like corn and wheat and flour and all that kind of stuff. He already has enough businesses. So what he wants to do is to make sure that enough of the corn that he's buying to turn into cereal is at a certain price. So let's say if his numbers are like, all right, 50% of the corn that I need to buy, it has to be at $1 a pound. Cool. Those are the numbers. Well, how do we do that? Jesse and I make contracts where I say, all right, I'm going to sell you X amount of corn at this price. Now, you don't have to buy it. You don't have to store it today, but this is a financial contract between the two of us. So that way I'm protecting myself from catastrophic loss if the market falls out. He's protecting his business from having super overinflated prices. If there was a severe shortage of corn somewhere else, I know I got all the corn. I could start selling it to all these different places, and I can sell it for double, triple, quadruple. So what we just did, that's called a future contract, because the asset is going to be purchased at some time in the future. And this is how oil is traded. So oil is always going off of the future value of the buying and selling of that asset. So that's why the oil in the ground, it's not a stock. You just can't type in oil stock. I remember when I first started learning about the stock market, that was the first thing I did. I was like, oil stock when I was like 17. And I was like, there's no oil stocks. No, it doesn't work like that. It sells on futures. So that is the easiest way for me to break down futures for people. And these different contracts are always moving from party to party, and it helps each side control risk, because risk mitigation is one of the most important things you could do in the wealth game. A lot of people will get rich by taking high risk with very small amounts of money. And then as they get there and they want to go from rich to wealthy, now they're taking very small risks with large amounts of money.
So this is for folks that have not chosen to invest in themselves up until this point, because like the asset class is all about understanding the value of the various asset classes that are out there and how to maximize off of that value. Our greatest asset, well, my greatest asset and Earl's greatest asset are ourselves, because we have invested in ourselves accordingly, which means that wherever we go in the world, we're going to be able to provide value. For those of us who have not us, and when I say us, I'm saying people, human beings, those of us as people and human beings that have not chosen to intentionally invest in ourselves, there are other ways. And that exactly what you just described, it's one of those ways. Although that is a way of investing in oneself as well, by understanding the stock market. But, absent of, because it takes a long time. When I look at somebody like Ian Dunlap, Ian has spent an exhaustive amount of time learning the data behind the stock market. And as such, he's able to price stocks at a point so that he knows when to enter and when to exit. And that's like one of the most difficult things to really understand. But he's got a formula, and it works. For those of us who do not have like invested time into increasing our own individual value, the stock market, understanding enough about it to leverage things like the futures that you just described. Because again, the game, the world is shifting fundamentally. And those of us who do not have assets, and again, us as human beings that do not have appreciating assets, are going to become prisoners of this permanent underclass that they are intentionally establishing. The powers that be are intentionally establishing. So, absent the time of like really learning and mastering a unique skill set, the stock market, just knowing enough about it to be dangerous. Purchasing assets that appreciate. Bruh. Because again, what has been ain't gonna be.
Right. Right. There's this Alvin Toffler quote that I've really loved over the last decade, maybe 15 years since I've heard it. And I'm going to paraphrase, but it basically says that the illiterate of the 21st century are not those that cannot read and write, but those who cannot unlearn and relearn.
Mm.
So we have to stay malleable in this. So what I just described is the basics when we're going into quantitative trading and quantitative investing. I am not a quant. So that's the term that they call people, or sometimes they call them a brain, depending on where they trade. Like, oh, that's a brain right there. That's a quant. Cool. That's not what Earl does. I make sure I help my clients understand what they have, the upsides and downsides of it, and then where different assets can help support that or replace that. So one of the great conversations that's coming up more and more, and I'm glad people are finally talking about it. Financial advisors have been looking at me like I was crazy for the last 2 years. Maybe I am a little crazy, dog off the chain. But two big things: Roth conversions, huge. Everybody and their mom was talking about it now. Taxes are on sale. You guys got to convert that money now. What does that mean if I break that down? You have a bunch of money in a qualified account, 401k, 403b. Most of the alphabet soup is a qualified account. That means the IRS crafted your retirement plan to generate income for the United States government. That's what it means. Not that it's crafted in a way to guarantee that you get to retirement with a certain number, that it is crafted through formulas, through actuaries to generate income for the United States government. That's what it is. And if we look at the numbers, it's a really simple thing. When I talk to my team down south near where you are, when we're talking in Burlington, a lot of folks say, hey, when it comes to retirement, would you rather pay tax on the seed or the harvest, baby? And everyone's like, the seed. Why? Because you never know how big the harvest could be. Exactly. Or if you know you're going to have a big harvest, why would you want to pay a big tax bill? That's the simplest question to ask people. So with this Roth conversion conversation, taxes on sale, as some advisors are calling it, we are currently in the lowest tax rate that's existed in the United States, in the modern United States. I know someone's going to hop on here and talk about before 1913. Not talking about that, because if we really factor in how high tariffs are, tax rate was still high. It was just paid in a different way. So get at me. But Roth conversions, if you are not working with tax erasers, there are not companies out there that both combine a tax strategy alongside your Roth conversion so you can convert at a 10% tax rate or less. It just doesn't exist. The second thing that I'm excited to start hearing more and more advisors talk about is bonds, and that it's time to get rid of them. A bond is an IOU. So if Jesse needs money for his company, he can go public, he can create a bond. So a bond is normally done through a private equity firm, but it's just saying, hey, here's this money, here's the terms on it, it needs to be paid back in this amount of time. If I want my money to work hard, I might loan Jesse some money for his company so he can go out there and create wealth and help families and help communities. And then I get a nice little return on that money. That's all a bond is, whether it's business to business or it is a consumer to the government. And we're talking about federal bonds, or you're getting one from your city where you're putting money into your city because you believe in where you live in. That's a municipal bond. And if you get those where you live, they're tax free. So it could be a really great place to let money chill, kind of like a savings account, except you don't get taxed on it, which is big. You never want your tax liability and your wealth to have a positive correlation. You want those to be opposite. You want your wealth to climb and your taxes to decline. So bonds have been negative for almost, I don't know, 60, 64 months. They've been going down backwards. Traditional financial advising says, hey, put 60% of your money into the stock market, put 40% into bonds, let that thing run for 30 years, and you good to go, baby. You're good to go. Well, people who did that lost 19.3% over the last 5 years, because what we found out is that bonds are just as variable as stocks. So if your hedge against variability is variable, do you have a hedge? No, not at all. It's like, if your brakes made your car go faster, do you have brakes? No, you don't. So shifting people away from that and showing them other alternatives. Sometimes it could be a portfolio of precious metals where we can take an IRA and we can put it into a gold and silver mix, where the gold and silver has to be stored in a certain facility. There's different rules if it's pre-tax money, but if it's post-tax money, you could straight up have the gold in your crib. And having $1 million in gold is really small. It fits in your hands at this point in time, and you could have it there. And if you have it in U.S. coinage, like a double eagle, then it's nice that as it gains and you sell it, you don't have to pay taxes on it because it's U.S. currency. So that's not a loophole. That is tax code. So there's so much nuance we can get into. But the thing is that making sure our money plans make sense, because those cents make dollars. If you're looking at the national debt right now, it's growing by $5 million per minute. The only way we can pay the national debt down is everyone gets super honest in the government and they stop overspending. The different private companies that work for the government as contractors decide, hey, we're going to keep our rates low because we're patriotic like that. We're going to take an L.
Hold on a second, bro. So we were just mentioning about the investments that we've made into ourselves. Mm-hmm. When did you start investing in yourself in the sense of like comedy? Because like you gotta be like exercising your comedic genius right now. Our Congress not overspending the budget, like
I know
that's a good one, bro. It's a good one. Like when did you like it's the ROI on that investment, bro? Like you killing it, bro. You woo.
Bro, everyone should be laughing like that, because it's like an impossible thing. It's like the government's going to spend less, everyone's going to get super honest, or they have to raise taxes.
Oh man,
which is more likely? The second one. Okay, if they're going to raise taxes, would you rather pay more on the seed or the harvest? Because we already know what they're going to do. We just watched this administration give tens of millions of dollars to their sons and daughters. It's wild. Hey, don't fund SNAP. Okay, then cities see different chains that are really hard for money. They're hard pressed because they don't understand basic economics. SNAP is one of the most cost efficient programs we've ever had, because every dollar that comes from our tax dollars and it goes into SNAP, it creates about $1.40 to $1.50 in value in the market, because that money is getting spent exactly where those folks live. With the cutbacks to SNAP, we're seeing many, many different organizations having a hard time coming up with the money. Who would have thunk it? I don't know, just anyone with a basic economic understanding. So my guy. So I say all this, and we're talking about, getting our tax game right. We're starting to understand risk and investment. So a lot of people probably heard that future piece and said, okay, I want to invest in futures. That's not the goal. The goal is for you to understand how businesses and markets move, that they're thinking about risk maybe first, or maybe it's risk and profit right here. And they're almost happening at the same time when we're talking about the global scale of economies. When you hear all this and we think about a business and we think about the value of a business and the different things we should be focusing on in our businesses as all these wild things happen, what's the first thing that comes to your mind? What do we need to know?
Right. How to engineer value into assets, how to own and maximize assets, bro. Like, I don't know how we get around that.
How to own and maximize
The
assets.
value of assets.
Yeah, how to extract that value. And it's something that I think about every day with this partnership, building this podcast with you, how simple it's going to be with my first acquisitions this year when they happen to be able to hire Bullseye Consulting and to know that we're Gucci. Like, okay, my deal's been underwritten, it's been looked at, we know what we're purchasing, but knowing that with your eye and your skill set, we know what it's about to be and what it's about to do.
100%. Did you have, because you are far more versed in this than I could even imagine. Have you heard anything about the testimonial that Kevin Walsh gave, the incoming Fed chair?
No, I have it saved, but I haven't got to listen to it yet. I had too many clients.
So he's talking about lowering interest rates and liquidating the United States balance sheet. So all of the assets that the United States currently owns, selling them off. In the current state of the economy, what does that result in from your experience? What does that mean?
Well, what I would say from my understanding, because it's never happened before, not in modern times, where a country sells off all of its assets to say, hey, we debt free. Bananas.
Oh yeah, and that was the third one. That was the third one that he going to eliminate the debt, like through this, like these things that he's doing. He's going to eliminate the national debt by lowering the interest rate and liquidating the assets that we currently own. I'm sorry, go ahead.
So one thing this current administration has been doing multiple times this year alone, I think they've done 3, possibly 4 buybacks. So we talked about bonds at the beginning of the episode. A lot of our debt is owned by us. So we owe the money to us because all of money is created from a debt-based system. So when we lower the interest rates, then we basically refinance that debt. So the debt we owe to us is lower. Woo! So that's one way that lowering interest rates would shift that sort of debt. But the thing that gets dangerous is when you have a very volatile economy and you shift the rates like that, and we also see buying power going down for a lot of people, we see people losing jobs, then we can see wild swings of the cost of different things like real estate. So right now, real estate's going backwards in Colorado. Denver is the fastest city in the United States for losing value in your home. And there's like a mass exodus happening in Denver. And then we'll probably see something similar in Colorado Springs, maybe 3 to 6 months after, where we're seeing, dang, a lot of these home values are coming down because they were overinflated. To just snap these different pulleys like this, it seems like a very, very, very bad idea. Where it's like you go into a depression and then you just have to let the market fix itself, because when the government tries to fix markets, it's rough. Even like Joe Biden, when he was the president, the way he was handling the rate situation and the inflation situation was a smooth landing so that we don't end up in a depression. But everyone was complaining, like, damn, the price of stuff's going up. Like, look at ground beef, look at this, look at that. And like, people are so upset. They're like, we got to get him out of there. We got to get Trump in here. And then they see that hyper inflate, since he's taken office. And they're like, damn, I guess the Biden thing wasn't that bad. Like, it hurt, but this is about to chop my foot off. So it's wild. And the other thing that's kind of crazy that our nation is always afraid of is deflation. We always talk about inflation, but they never talk about deflation. And when I was younger, I wondered why. It's like, why don't we ever talk about the other side? We only talk about inflation and how it's healthy to have a 2% inflation every year in the economy. That's basically saying you get to increase the cost of your good or service by 2% every year. In real business, is that what you do? No, it may not make sense. Or it may make sense to increase your price 50%. It depends on what you're doing, what market you have, what demographic you're tapping into, right? So deflation is supposed to be the worst of the worst. And when we were in COVID, this kind of taps back into oil and oil futures. You remember when we had COVID lockdown and you turn on the TV and you see that oil futures contracts are trading at negative $57. It's like, what did that mean? Does that mean I'm going to get paid to go to the gas pump? No. What it means is that the premiums that you pay to get into options contracts is very different when you don't suspect that the future price is going to be higher. So what happened when we were in that situation? We saw Saudi Aramco, we saw Exxon, we saw these really, really large companies just start throwing up oil rigs everywhere. They started drilling, they started fracking more. Why? So they could artificially shift the chart with supply so that they could keep the price up. Otherwise, the price was going to drop to like 74 cents. And the fear that, these economists say, especially a lot of people in this administration, is that if we had deflation, there's no way to stop it. So that's where things are going backwards. And now your dollar is becoming more and more powerful. So before deflation, one of your dollars could go buy one burger. But we start seeing it go backwards. Now one of your dollars buys two burgers. At first you're like, this is amazing for me. This is so cool. Now I have more buying power.
That impact the supply though, right?
Yes. Until the supply is jacked up, until your paycheck is different, because they're like, hey, or your workload is different, where they're like, hey, we're going to give you the same paycheck, but you have to work 20 more hours. You'd be like, absolutely not. I'm not going from 40 to 60 or 60 to 80, whatever you're doing. So it would just keep rolling and rolling. They say there's no way to stop deflation. And that is an area that I definitely want to learn more about, at least on a theoretical level. I'm good on going through unprecedented times. Like since 2018, bro, every time you turn on the TV, we're going through unprecedented times. Yeah. Bananas. So yeah, brother, that was a great question. So the easy answer is like, we don't know. We don't know what will happen, but we can surmise that it would not be good to just yank on so many levers. And that's why we see Powell, he stayed on the board at the Fed. And that's also unprecedented times because they never do that. Once they leave the Fed chair, they go off and they live a different life. If they're young enough, they might go to private equity so they can make more money in the private sector. He said, no, I have to stay on this board so I can protect America.
Bruh, that guy is a fucking patriot, bro. I like we have watched major institutions in the United States absolutely cower to this administration. Jerome Powell? Nah. Like he been on some YOLO fuck around and find out type shit. And I salute that shit to the highest degree, because ultimately what's right is right and what's wrong is wrong. And like, we are watching, regardless of anybody's politics, the idea, Earl, can you imagine if when President Obama came into office, he was a $2 billion man, and within less than 2 years, he became a $6 billion man. Can you imagine what this system would have done to him?
I remember his net worth was in the lower millions. And I watched Fox analysts say he's too wealthy to be president because he can't connect with the common man. Just to watch that exact same anchor support our current president multiple times, voted for him 3 times, saying, look, we need a billionaire as president because we need to run America like a business. Well, I do think America is a corporation. And right now, I think its board of directors is weak.
Bruh. And that's a compliment. Like so that's where, again, going back to Jerome Powell, the guy is a fucking patriot, bro. Like, I'm like, it's very seldom that I'm just like at like a complete loss for words. And with all of this shit, like, it's hard to even articulate a clear point. Like, I don't. Jerome Powell has been standing in the flames. Like, when we rewind back to COVID and the amount of money that was infused into the economy. So credit to folks like Larry Summers. He played a pretty significant role in Democratic administrations in the past.
Mm-hmm.
He came out against his own party to say, yo, if we put all of this cash into the economy, inflation is about to go ridiculous. Like, he said that while Biden was still in office, while Biden was in office.
Mm-hmm.
And that's exactly what happened. Like, it went nuts. Powell was put into his position by this current president during his first administration. And he's been doing the same thing. Not the political expedient thing of whatever that the executive branch wants, but what's best for America. Because his job is to curtail and control inflation and to stabilize the job market. Like he has to balance those things as the Fed chair. And he has fucking been doing it in the most impossible of situations, in a time in which the stats around the job market haven't been legitimately published in quite a while. In times in which the economic projections have been revised like quarter after quarter after quarter. Like, this is unprecedented. It has been unprecedented economic times. I mean, going back to 2022, when Biden initially said that we weren't in a recession because we've never seen such unemployment, the rate of unemployment, which was all bullshit back then.
Yeah,
Like,
they completely redefined the metrics for recession and CPI. Like, people are probably watching this like, oh my God, I thought they were Democrats. No, we're pragmatic. We will call out any president, any party, anyone, because we're here to analyze what is, not what we feel, facts over feelings. So I got a question for you that popped up as you were telling that part. Like, bro, you killed it. You're spitting flames right now. How do you feel about the idea of us going away from quarterly reporting for businesses being the standard, and we go to semi-annual, and then next year just annual reporting when we're talking about the largest institutions in the nation, and what President Trump is trying to do, dangers there? Like, what's the first thing that pops up in your head?
more concealment, more nefarious outcomes as a result of it. The stock market, when you talk to like experienced economists, how is the stock market continuing to rip with all of the things that are going on? Like, it's just going up and up and up and up and up and up, and it's been continuing to do that. Well, what drives the stock market? These same companies that are not going to have to report for extended periods of time now. So when they're having true financial problems, because we got to talk about all of the games that they play in order to be able to report what they report under the current infrastructure. Like, there's a lot of financial gamesmanship that goes on in order for these major companies to report what they report currently on a quarterly basis, which is not an accurate reflection of what's actually going on in these companies. So that's happening right now when the reporting is expected to be quarterly. When it's annual, so instead of manipulating the books 4 times a year in order to project, they only got to deal with it once now. Like, I don't see how
To me, and I'm so glad that I have you here and your expertise, because I've said that to a few different people, and they're just like, so probably saves the trees. And I'm like, okay, I'm in the wrong room talking to folks. Or there's someone who runs their business. They're a founder that is amazing at what they do, but they do not get into any of that kind of stuff, which is fine. There are people that still end up very, very prosperous like that. We're not those dudes. We're not those dudes. The first thing that pops into my head when I saw that report and saying, hey, we want the SEC to come play ball with us, and then I fell asleep in the middle of the speech. It was crazy. Allegedly, don't sue me. But the first word that popped in my head was Enron. I'm just like, you want everyone to cook the books because trading is sentimental. And I don't mean it makes you cry, it makes you happy. Of course, it definitely does that and a whole lot more. But trading is based on speculation and sentiment. So the way the market moves with its layers and layers of variables and different options and derivatives, where we're saying, okay, if a trade is buying equity into something, an option is a bet where it can go up or down and you can make money off of that. Well, people can make a bet on that bet, and someone can make a bet on that bet. And that those are derivatives. And that's how we end up in the big short situation where the actual asset that we're talking about. So in the big short, that was a mortgage, right? Where the actual mortgage might represent $1 million, the derivative stack on top of it represents 50 million, 100 million, because it is going 17 layers up. And then this crashes. What happens to all this stuff? It has to crash as well. So with the different layers, I love that you called it financial gamesmanship. That is so clever of you, because there are clever ways that you can do things and be ethical. Like the stuff I'm studying right now, the new designations that I'm getting, the new strategic partners where I'm learning, wow, that's how that works. Oh, that's how you pull the equity out, and wow, that's okay, I get it. Financial gamesmanship for sure. There's a point where it becomes completely unethical, where you are not doing this to bypass maybe a bad partnership, maybe it's just bad economic time, something crazy happens. You're just trying to wait for high tide to go out and you get back to low tide because that's when you win. We're talking about intentionally defrauding all your shareholders because you're not doing what you need to do as a company, because you're not creating value anymore. Whew. It is, it's bananas. We need, man, I can't wait for us to figure out a solution to get back on Riverside, because we need some DeMarcos today. Because coming with the heat. Well, my brother, I feel like we hit so many different points today. Did you have anything in closing? Did you have anything that you felt like we left out for our listeners today?
No, per usual, bruh. Per usual. Like this whole concept, when we first sat down to discuss it in Third Space Coffee, the intent has always been and continues to be creating an avenue to actually talk about shit in a manner in which we can like really control our own narrative. There's a lot of things that have been happening and continue to happen in this world and in this United States economy that like they are playing in our face in a different kind of way. So for every week to be able to come in here and talk through this shit and through a real lens, like is it's refreshing to my spirit. No, it's I don't have nothing else to add to to this here episode, because again, it's a continuation of just truly having real dialogue about the things that are impacting us in real time, but most importantly, are just going to be hugely influential to what the future state looks like. And for those of our classmates who have been rocking and continue to rock, they know that the intent behind all of this is for us to be actionable or action oriented in our intentionality to combat the blatant nonsense that they try to put in front of us. So, yeah, these are the times. Truly, these are the times I feel reticent to kind of continue to echo the same sentiment, but I can't help it. The world is changing in front of us. We have an option to have influence over what it's going to look like on the other side based on the decisions that we make right now. So I would encourage all of our classmates to truly shake yourself, wake yourself up, understand what it is that we're facing, and move accordingly. And my man Earl.
And my guy Jesse.
It's the Asset Class. Thank you for listening.